What is up, everybody? Guy Costin, founder and CEO of Dakota. We are hosting a can't miss conference on June 17th in the afternoon at the New York Athletic Club. This is something that you don't want to miss. And I know there's a lot of hyperbole, but we're hosting an investor day with managers across all asset classes. And we're going to ask them one question for a 10-minute interview on stage. So 10 minutes each, going through what are you so excited about in the next 1 to 3 years from an investment perspective. And we're going to get some unbelievable feedback across all these different asset classes. And if you look at the list, this is a world-class list of managers. Simply register on Dakota.com, and as an allocator, it's free. Register today at Dakota.com. Don't miss out on this.
Welcome to the Dakota Research Podcast. This podcast is for informational purposes only and should not be considered investment, legal, or financial advice. The views expressed are those of the speakers and do not necessarily reflect the opinions of Dakota or its affiliates. We do not provide investment recommendations or solicit investments in any securities or funds. Listeners should conduct their own research before making any investment decisions.
Welcome back, everyone, to the next episode of the Dakota Research Podcast. This is week 17. We have an exciting lineup today. We're going to be talking about the Middle East. Last week, we covered investing in the space economy, which is a great discussion. This week, we'll be focused on the Middle East and what are the trends that are shaping that part of the globe. There's a lot of activity going on, particularly here at Dakota as well. So we'll get into some of the data behind the stats that we're citing today on the show. But just for some housekeeping items, as always, I have my colleague here, Alex DeMarco, joining me at the desk. Over the next 30 minutes or so, we're going to walk through a deep dive discussion about the Middle East and why it's so important from a capital markets perspective today. But just to kind of kick things off, Alex, can you set the scene? So why is the Middle East always in frontline headline news?
Yeah, I think when people think about the Middle East, long viewed primarily through the lens of oil and gas and energy. But the Middle East is now redefining itself a little bit as a center of innovation, infrastructure development, and global investment activity. So these Middle Eastern economies historically, especially in the Gulf Cooperation Council, have been really reliant on exports of hydrocarbons, with oil revenues historically accounting for almost 90% of national budgets, which is a crazy number. But if you think about what's going on with the volatility of energy markets, climate goals across the globe, they kind of need to diversify a little bit and pivot. So now there's a lot of national development plans that are steering economic policy. So a few examples, the UAE Vision 2031, the focus there is building robust technology, AI, financial services, logistics, smart cities, and a push for a green economy. Saudi Arabia has their Vision 2030. There's an emphasis there on mega projects, tourism, entertainment, defense localization, mining, and significant privatization initiatives through the Public Investment Fund. Another example is Qatar National Vision 2030, which is balancing modernization with tradition, investing in education, healthcare, infrastructure, and really becoming a knowledge-based economy. And think about this from like a macroeconomic perspective. There's some key indicators that we're seeing that suggest that the region's building some solid foundations there. So if you think about inflation within the GCC, it's been relatively controlled, supported by dollar-pegged currencies and sort of energy windfalls. The debt levels have stabilized due to a ton of fiscal surplus, which is enabling large-scale sovereign investment, and regulatory reforms as well. They're facilitating easier foreign investment, including 100% foreign ownership in some UAE sectors and streamlined IPO processes in places like Saudi Arabia and Oman. These reforms have not only enhanced investor confidence, but also positioned Middle Eastern nations as competitive investment destinations vis-a-vis developed markets and rising Asian economies. Also, if you think about where the Middle East is positioned from a geopolitical perspective, they're situated between Asia, Europe, and Africa, and they're really leveraging their geographic advantage to become a global transit and investment corridor. So if you think of some recent initiatives like the India, Middle East, Europe Economic Corridor, they're really expected to reduce shipping times and cost, and really this enhances the region's logistical appeal. In tandem, regional governments are establishing themselves as mediators and stabilizers in an otherwise global volatile climate, so which is really helping them attract international capital that might be very wary of exposure to Eastern Europe and parts of Asia. A ton of investment also coming in urbanization, tourism, and sort of cultural areas. So the Middle East is really putting a lot of money into these mega urban projects. So a couple there, NEOM in Qiddiya in Saudi Arabia, Expo City in Dubai, and Lusail City in Qatar. These are showcasing a broader vision of the future. You have these cultural destinations, these smart cities with a ton of technology built in. They're not really just real estate plays, but strategic tools to sort of generate new economic sectors and appeal to the area.
And I've seen the photos of some of these kind of like futuristic looking like cities where you can kind of be immersed in sort of a 3D world and what's to come there with all the technology and investment they're making. But yeah, as you mentioned, like what we really have here is you have a tremendous amount of capital that is, all these countries have been sort of benefactors of the oil economy, seeking to diversify their asset bases and think really long-term, very strategically about how to position their economies for the next 100 plus years. And they're also strategically positioned, as you mentioned, between a middle point within the global economy and literally adjacent to Europe, India, Asia, and also all the big trading hubs and infrastructure that sort of connects the global economy. And there's obviously a lot of strategic importance to the region that we won't necessarily get too far into on this discussion, but just want to talk about a little bit more at a granular level about sort of the trends that are shaping sort of the Middle East from an investment landscape perspective behind all this capital. And we see these names crop up all the time. Also, we read a ton about it in the Dakota News, but sovereign wealth funds, these are the largest pools of capital globally. They are strategic in nature, but they're also the capital that's redefining these economies in the Middle East. The sovereign wealth funds are becoming catalysts for economic disruptions. Gulf sovereign wealth funds are playing a pivotal role in the region's economic transformation. You have increased assets under management. They've seen their AUM grow from approximately 59% since 2020. Wow. Bolstering their capacity to invest in both domestic and international markets. So think of these pools of capital both being important locally, but also making investments in the U.S., as we'll get into in a little bit. Things just came out of a recent trip in May by U.S. Business leaders and political community, but also other areas of the globe as well. There's also strategic co-investments. So Saudi Arabia's Public Investment Fund, PIF, is anchoring new Gulf-focused funds from Goldman Sachs Asset Management, which is targeting private credit and public equity strategies. You also have a number of global partnerships. PIF has signed memorandum of understanding worth up to $51 billion with Japanese financial institutions aimed at attracting foreign investment and to help diversify their economy. Putting sovereign wealth funds aside, there's also a significant concentration of private capital. So a region of unparalleled growth potential here. And you continue to learn about new US firms setting up offices, Asian firms setting up offices in the region to attract those types of capital. The Middle East is emerging as a prime destination for capital raising, particularly. There's a growing investor confidence behind this trend. Apex Group's survey indicates that 39% of global asset managers view the Middle East as offering the highest growth potential for private capital in 2025. Wow. The highest, surpassing Asia Pacific and North America. Venture capital, also seeing incredible momentum. The region's venture capital ecosystem is thriving with significant investments in technology and innovation sectors. We'll talk about AI in a little bit. And private credit expansion kind of being the third leg of the stool. Private credit is filling financing gaps left by traditional banks, offering alternative funding sources for mid-market firms seeking non-bank financing. You think about this area of the region, different banking dynamics than you would find here in the US or even Europe for that matter. So having this private capital, particularly private credit, to kind of step in and fill the gaps to build and develop sort of these industries and economies from there. Another point to make is just a lot of the M&A deal activity. There's a significant surge there in the Middle East, seeing remarkable growth. Record deal values. The MENA region recorded about $46 billion in M&A activity in Q1 2025, marking a 66% increase compared to the same period in 2024. That's a unique trend to this area. Yeah. So for people looking for where capital activity is really on the rise, it's definitely in the Middle East. You're also seeing a tremendous amount of cross-border transactions. These would be cross-border deals contributing about 81% of the total deal value, highlighting the region's integration into the global investment landscape. So these might be through partnerships. These might be opening up new business endeavors in the region, but it also might work vice versa, where there's strategic alignment where companies could also expand outward as well to get a piece of the global footprint. We're also seeing sectoral diversification within M&A. Key sectors attracting M&A investments include technology, renewable energy, infrastructure, all these things that are aligning with national diversification strategies. I will take a second just to talk about the main investment areas of focus for a moment. AI, not just a US phenomenon, not just a phenomenon that we're talking about here, but also some of the largest checks are being written out of the Middle East, significant amount of investment. AI research and startups, cloud computing and data centers, cybersecurity, fintech, and government tech, all a big focus in the area. Also, renewable energy and energy transition solutions. So we talked obviously about thinking about beyond just the oil and diversifying away. And this is, some of the new innovation coming out of renewables and energy transition taking place actually in this region itself. So there's a heavy investment in solar, wind, green hydrogen, and carbon capture type technologies there. As you would imagine or expect, rather, there's a tremendous amount of infrastructure that's required to make all these things work, as well as urban development for people to live, offices to open up into. So you're seeing smart cities, ports, logistics hubs becoming of critical importance. These are being built to position the region as a global trade connector. There's actually some recent news too, the partnership with BlackRock that was buying some ports in the area that people should check out. Healthcare, including investments in hospital systems, pharma manufacturing, and medical research. You mentioned a little bit about tourism and culture. Obviously a lot of people traveling to region. We're having Dakota Cocktails over there coming up later this year. You have a tremendous amount of new business activity taking place. Where are people staying? What are the amenities that service these global business folks in the area? On the cultural front, Vision 2030 emphasizes a lot of this kind of cultural element, including film, music, museums, other heritage sites for people to get out and experience the region for themselves beyond just the business aspect of it. You also have a tremendous amount of focus from domestic capital, but also increasingly importance of the U.S. capital investing in real estate in the region through either mixed-use properties. These also could be sustainable developments. They're being built across luxury, hospitality, residential, commercial spaces. And then a few other things to hit on too, logistics and industry. These are investments in ports, specialized economic zones, manufacturing clusters to kind of develop the backbone of what's required. And also in growingly important VC and startup ecosystem focused on fintech, ed tech, green technologies, and health tech, to name a few. We talked a little bit earlier just about to tease the big pools of capital, these sovereign wealth funds, Alex. So we'd like to go through a couple of them, examples of just where their size, where they're allocating, maybe the descriptions about the firms.
Yeah, let's hit on some sovereign wealth funds and sort of where they're looking from a strategic perspective. One of the biggest ones is the Abu Dhabi Investment Authority, it's the ADIA. They manage around $1 trillion in assets, which is an insane amount based in the UAE. So from a strategic perspective, they use a strategic asset allocation model as a foundation for its investment approach. They have a strong emphasis on long-term, globally diversified, and disciplined investing with a strong commitment to capital preservation and consistent returns. Probably like a lot of allocators across the globe, equities make up the largest percentage of assets in their portfolio, in addition to more than 24 other asset classes, including fixed income, hedge funds, real estate, private equity, infrastructure. So nothing too out of the ordinary there. The Kuwait Investment Authority, this is the oldest and first sovereign wealth fund in the area. They manage around $923 billion of assets based in Kuwait. They manage two main funds. So their general reserve fund is the main repository for all state revenues and the account for government spending. Their Future Generations Fund, which is a long-term savings fund, which is designed to prepare Kuwait for a post-oil future. So this follows a long-term, growth-oriented investment strategy, consists of investments outside Kuwait based on the SAA and various asset classes such as equities, bonds, and alternatives like private equity, real estate, and infrastructure. You mentioned Public Investment Fund, PIF. They also manage around $920 or so billion of assets based in Saudi Arabia. They also sort of have a dual portfolio strategy. Their domestic portfolio supports Vision 2040 investing in those mega projects that we touched on earlier, like the Red Sea project, ADIA, NEOM. Sector focus really in tourism, real estate, manufacturing, logistics, renewables, those sort of investment focus areas that you had mentioned earlier. Their international portfolio really aims to be a diversifier and really generate high returns. So they're focusing on technology, entertainment and sports, think live golf, esports. They've made an investment in Newcastle United, financial services, real estate, logistics, and other alternatives. The Qatar Investment Authority, they manage $475 billion. They blend traditional asset strength, think finance, real estate, with sort of future-facing investments like sustainability and tech. The Mubadala Investment Company, they manage around $330 billion based in the UAE. They operate through 4 platforms. Their UAE investment platform, private equity, real assets, and credit and special situations.
Those are all incredibly large pools of capital, all sort of aligned to kind of meet these domestic visions in their own respect, but also allocating significant dollars to, away from home into other areas of the globe as well.
And I think it's important too to highlight some family offices, the more prominent ones in the area, and talk about what their focus areas are from an investment perspective. So I'm going to dive into that real quick. Tilad, they're a Dubai-based proprietary investment group founded in 2013, backed by leading Gulf business families. They're regulated by the DFSA and focus on institutional grade international investments, primarily in North America and Europe, with a growing interest in the Asia Pacific region. The firm emphasizes capital preservation, operational discipline, and sustainable long-term returns. From a private equity perspective, they invest across the full private equity lifecycle, anything from venture to growth and buyouts, secondaries, all the above. Really want to achieve vintage and stage diversification on the PE side of things. On a real assets side, they target a mix of core and opportunistic real estate and infrastructure investments, really investing a lot there to get that non-correlated return stream that's so attractive to that asset class. From private credit, they really look for steady yield and capital preservation, invest a lot in senior debt, which really offers a sort of counterweight to their equity holdings. And then from a direct real estate perspective, they have a regional focus there in North America and Europe. They've built a pretty strong track record with their real estate program in acquiring, managing, and exiting properties through affiliated entities, demonstrating hands-on asset management and development capabilities. Another family office that's prevalent in the region is the Mahid Al Futtaim Trust. This is a Dubai-based single-family office for the family, and really was established to manage and grow their wealth. Their focus area, really, they're just a multi-asset class investor. So they deploy capital across most asset classes: fixed income, public equities, private equity, venture, and real estate. They really emphasize diversification and value alignment, investing in regional real estate, innovative private companies, and liquid market instruments to balance risk and opportunity. The Al Noais Investments, that's a family office based in Abu Dhabi, founded in the late 1970s. It has grown to a regional powerhouse with a really strong track record of managing a diversified portfolio across a ton of different sectors like healthcare, IT, real estate, hospitality, and oil field services. They own some significant stakes in some single companies, so Danway, Pharmatrade, Rotana Hotels, Archiradone. So they're kind of a key institutional investor in the economic development, focusing really on these specific companies, which is interesting. So again, similar to the other firms we spoke to, they operate a broad and diversified investment strategy, investing in private equity, real estate, venture, and infrastructure. Their focus is on scalable businesses within vital regional sectors like energy, healthcare, ICT, and construction. They have a mix of direct ownership and strategic partnerships and look to combine long-term operational improvement with a commitment to innovation, sustainability, and regional growth. One more to call out is Damac Capital. It's the investment arm of the Sajwani family office and part of the larger Damac Group, which is a global Emirati conglomerate founded by Hussein Sajwani. They have deep roots in hospitality, logistics, and property development. The firm supports the group's expansion into capital markets, and their strategy focuses on long-term capital appreciation and wealth preservation, underpinned by a strong ESG and sustainability framework. They also manage a sort of a multi-asset platform, investing across venture, private equity, co-investments, public equities, hedge funds, structured products, and more. It targets emerging market startups and strategic acquisitions with growth potential, focusing on sectors like data infrastructure, retail, fashion, hospitality, and real estate. So kind of what I'm getting from that and talking about all these family offices is they're all extremely diversified, investing on a fund level, individual company level, all sorts of asset classes from a real estate perspective, looking for that uncorrelated return stream, very active in private equity, but also still invested significantly in the traditional asset classes too.
And it sounds like there's not too many dissimilarities from just family offices you see in Europe or Asia or in North America. I mean, they're, as you mentioned, diversified. They have a heavy emphasis on alternatives. So for fund managers looking for, more opportunities to raise capital or to find new partners for their deals that they're making, this part of the region, there's a lot of opportunistic and forward-thinking families, but also institutions as well. And we'll get into a couple of the allocation trends now, but I think just that point you made about these being like very permanent long-term sources of capital and the way they think out about managing their pools of capital as a kind of a strategic importance for them, but also seeking higher rates of return in the way they invest. What we've seen is definitely an acceleration of commitments to alternatives more broadly. And I think that's partially a function of just the region opening up to kind of the more global economy and thinking about what are ways or what are sort of the analogs of other large institutional investors. How are they allocating? What are the funds? What are the managers? Building those relationships, opening offices here in the US, Europe, Asia. We've definitely seen accelerating commitments to private equity and private credit. As I mentioned, 64% of Middle East and North Africa allocators plan to invest in private credit in 2025. So it's definitely a core staple of focus of where they wanted dollars to go. Another 57% plan to allocate to private equity, which is up from prior years. And then 36% aim to add new manager relationships, reflecting an active search for differentiated sources of return streams. This is not necessarily always the same dynamic that you would see within the US. A lot of the kind of mature asset pools are continuing to look for their existing managers to come back to market and allocate behind them. In this case, you have a large, almost 40% of the groups basically seeking new opportunities, new managers, new relationships to build and grow with over time. A few reasons for what's driving this shift. On the first hand, from private credit perspective specifically, you have elevated interest rates making the asset class profile particularly more attractive to these types of investors. You also have faster capital recycling in private credit versus private equity, making it easier to manage liquidity. For Middle East, North Africa allocators, they're also hedging slow PE distributions by over-allocating to private credit, so using that as a placeholder, if you will, also trying to seek higher double-digit type returns from that asset class. LPs expect illiquidity premium to persist, creating an attractive entry point in 2025 vintage cycle is another important point. Family offices are really the new frontier in private markets, particularly in this area. The Middle East, North Africa family offices are at the early stages of building out their private markets allocation, with many confirming an uptick in family office mandates across the Gulf. There's also a strong preference for secondaries due to faster distributions and greater net asset value transparency, and private credit due to the income and capital protection features. Family offices are not subject to liquidity constraints, allowing for more aggressive long-term commitments and opportunistic fund pacing. And then you have families with higher allocation alternatives have performed significantly better too. Some data that's come out of Cambridge Associates that have cited that. But there's obviously tremendous interest in alternatives, particularly from these groups. The elevated return expectation with a long-term horizon is also the point we were kind of making earlier, is that these investors, especially the sovereign wealth funds and the family offices, expect aggressive portfolio level returns that traditional public markets no longer satisfy. These are being viewed, particularly private market allocations, are being viewed as a core portfolio engine, not just like a satellite exposure. So they want to put big dollars there and get the higher returns out of that. According to Paul O'Brien, who is the former ADIA CIO, these expectations are anchored in the belief that alternatives, especially in the current macro climate, offer the best risk-adjusted returns. There's definitely a de-emphasis on U.S. short-term volatility, which really means the significance of short-term U.S. policy risk, viewing private markets as a long-duration asset class with vintages that will mature past today's noise is another mitigating factor. There's also a growing belief that European opportunities may serve as a near-term tailwind, offering geopolitical and currency diversification there. I want to kind of just come back to this point about just these pools of capital, and we definitely talked about in the past and today about family offices having a very long-term investment horizon, and they don't necessarily need any capital coming in the door to fund their ongoing lifestyles or meet their obligations or continue to run their portfolio the way they have. But I think it's also important to point out that sovereign wealth funds are also an interesting view, where they don't necessarily have the same type of liquidity required to continue to meet pensioners or retirees' needs, and they are much more flexible to be able to allocate capital with a much longer term horizon, and they have a lower preference for liquidity compared to many of U.S. and European institutions, even some of the largest institutions here in the U.S., but even some of the Canadian pension plans too, in the way they allocate their capital. So there's this notion of permanent capital, unlimited time horizon. Many sovereign wealth funds operate with an indefinite time horizon, so acting as true permanent capital vehicles. Their primary mandate is intergenerational wealth transfer and long-term national economic diversification, not short-term payouts or redemptions. This allows them to absorb a liquidity premium of private assets without immediate liquidity concerns. You also have the strategic and economic development mandates that we mentioned, things like megacities, infrastructure, new industries. You need to have a very long-term horizon to be able to meet these goals and objectives of building out these types of infrastructure that might not necessarily have a very high ROI from the onset. And then a lot of these families and individuals have actually been the ones behind some of the the wealth creation themselves, and have sat in the seat and are entrepreneurs. So they have originated from successful operating businesses, which fosters a strong preference for direct investments in companies and tangible assets where they can exert their own influence. And then there's also less stringent regulatory constraints historically for sovereign wealth funds. So while evolving, sovereign wealth funds have historically operated under different regulatory frameworks than public pension funds, often facing fewer liquidity-driven constraints, are just a couple points that I wanted to highlight. But just thinking about these longer pools of capital, not necessarily needing, and then you have the income component too, coming in from revenue generating assets like oil and other things that can help provide a buffer and allow them to allocate different than any other types of pools of capital out there really in the globe.
You covered a lot there, and I think one takeaway, you mentioned it earlier, but at the end of the day, these family offices, sovereign wealth funds, their investment characteristics not too dissimilar what's going on in North America. If you think about family offices, not only in the Middle East, but across the globe, they have that appetite for illiquidity because they don't really need constant liquidity to fund certain things. So they can stomach a little bit of that long-term illiquidity and get that premium, because they really, at the end of the day, they just want the highest returns possible.
Yeah.
So we talked a lot about sort of the LP side of the house in the Middle East. We wanted to highlight what's going on the GP side, these investment firms, who are the big investment firms in the area, and talk about some trends going on there as well. InvestCorp in Bahrain, one of the larger investment firms in the area. They're a global investment manager, strong presence and track record in the region. They're a sort of a mid-cap investor. Mubadala Capital, they are the asset management arm of Mubadala Investment Company. They manage a diverse portfolio, including private equity. Gulf Capital, they're an alternative investment firm. They make mid-market investments across healthcare, technology, and infrastructure within the region. Shua Capital, that's SHUAA Capital, based in UAE. They specialize in asset management and private equity with a focus in the Middle Eastern region. Waha Capital, they're a diversified investment company with private equity interests. Jadwa Investment, prominent Saudi Arabian investment firm. They offer private equity and other investment services. MBK Capital, based in Kuwait. It's one of Kuwait's largest asset management firms. They're focused in private equity. There's also a growing focus on private credit. You spoke to that from the LP side, but I think there's a lot of private credit firms launching in the area knowing that there's a lot of growth there and providing those flexible capital solutions for growth, acquisitions, refinancing, and things like that.
Developing this like local presence, local ecosystem of alternative asset managers. I'm sure we'll see this only continue to grow, and as people, obviously they're hiring in talent too, but they have their own homegrown talent as well, setting these businesses up. But then as time goes on, you'll see new firms created, which there'll be a lot to keep track of there.
Yeah, and there's also a lot of firms based abroad that are establishing presence and digging their teeth into the region as well. So a couple examples there. Fortress Investment Group, they opened an office in Abu Dhabi's financial free zone to tap into co-investment opportunities in private credit and real estate. This move aligns with sort of their $1 billion partnership with Mubadala. Kimmeridge, New York-based firm, which I'm sure some of you have heard of. They're focused on the energy sector. They have some ties with Mubadala as well. They're opening offices as we speak in Abu Dhabi's financial free zone. Arini, that's a $9 billion credit-focused hedge fund founded by former Credit Suisse star trader Hamza Lemsuger. Sorry if I butchered that name. They're planning to open an office in Abu Dhabi as well. That's part of a broader strategic expansion into the Middle East. Aquila Group, they're not US-based, but based in Hamburg, Germany. They're expanding their operations to the region as well, opening an office in Abu Dhabi. It's really targeting growth opportunities in the Gulf and Middle East. Brown Advisory, we know them well. Very large firm based in the US. They manage around $162 billion of client assets. They've opened an office in Abu Dhabi global market. They're seeing a lot of client demand for its global and US equities and fixed income strategies in the region. So they figured build an office, grow capability there. BNY Mellon secured a license just last month to establish a regional headquarters in Saudi Arabia. And Hamilton Lane, Goldman Sachs, General Atlantic, Lexington Partners, Guggenheim, Nuveen. I'm sure we're missing some as well.
Not a day goes by that you don't read a headline of someone opening an office there in the US, but also when you think about them becoming more global in nature, outward facing, particularly families. So a lot of the wealth management firms, you mentioned Goldman Sachs, but like firms like UBS and the like that are bringing advisory services to families that are truly global in nature and have vested interest all around the world, but then also bringing their own expertise to bear, whether it's in, particularly in hedge fund space or, other types of asset managers that are opening up offices there to, really meet the needs of the local businesses and the local wealth community too. Yeah.
And you talked a little bit about it earlier with the increased M&A activity happening in the region. And I just talked a lot about all of these investment firms that are based in the area, firms that we're going to expect to come about within the next few months and years. All of these US firms putting presence in the area. We've seen a lot of really recent news around deals and transactions in the area. Could you talk about some of those?
Yeah, absolutely. The biggest one too was just out of last month where the president was over in the Middle East and announced a $2 trillion U.S. investment agreement with Saudi Arabia, Qatar, and the UAE. This agreement spanned several different industries, but the key areas being defense, aviation, and artificial intelligence. This included a 5 gigawatt AI data center in Abu Dhabi in the UAE, Qatar's $96 billion Boeing jet order, and $1 billion quantum tech investment. Saudi Arabia's $600 billion in deals featuring $142 billion U.S. military purchase, $20 billion from DataVolt for AI infrastructure, $10 billion AMD partnership. NVIDIA was also part of this, 18,000 NVIDIA AI chips for Humane, which we'll talk about a little bit more in a second, and a major tech collaboration between Amazon, Google, Oracle, and others. So you think about sort of like the tech defense backbone of the region. The U.S. is playing a very leading position in that. $2 trillion in agreements, and there's a lot of all the large CEOs of U.S. firms were over there in the region meeting with business leaders and government officials. Some other recent transaction news that we've read about through Dakota, Lunate and Allianz Financing Company, WLL acquisition of ICD Brookfield Place, which is a significant real estate deal in Dubai for $735 million. Apollo Global Management's planned purchase of Vale Oman Distribution Center is a $600 million deal for a 50% stake in an iron blending and distribution company in Oman. And then Humane, which I mentioned earlier, which is launched by Saudi Arabia's Public Investment Fund, PIF, in 2025. It's a state-backed AI company aimed at making the kingdom a global AI leader by developing advanced Arabic large language models, building AI infrastructure like supercomputers and data centers, and partnering with tech giants like NVIDIA, AMD, Qualcomm, AWS, with a total investment commitment of approximately $77 billion, including $10 billion for a global AI venture fund, $23 billion in strategic tech partnerships, and a long-term plan for 6.6 gigawatts of AI-focused data center capacity. This all are aligned with the Vision 2030 to drive digital innovation and economic diversification. A few other deals to run through briefly. KKR and Gulf Data Hub partnership. This is a strategic partnership to scale one of the Middle East's largest independent data center platforms. We saw another $1.5 billion acquisition of a satellite company, which is focused on advancing technology in satellites. Mastar's acquisition of Greece Terna Energy is a $2.7 billion deal, highlighting the Middle East leadership in renewable energy investments. Saudi Arabia's PIF investment has also made an investment in construction companies, acquired minor stakes in 4 construction companies for $1.3 billion. And the list goes on. And there's a number, as I mentioned, of other kind of strategic partnerships and investments that are being made with on the infrastructure side too as well, not just data, but also like the ports and actually the construction and the real estate and the like that are taking place to kind of, foster all this growth too.
Chris, thanks for going over some of the deals happening in the region. I think just to really summarize everything that we've talked about today, I think looking at the Middle East historically, previously very reliant on revenues from hydrocarbons, oil and gas, and now that they're really trying to diversify, and you can really see that through Saudi Arabia, UAE, these sort of national reforms and plans through 2040 and beyond to really expand their presence globally and invest across diversified areas where it's AI, technology, logistics, hospitality, real estate infrastructure, basically all the things we spoke to, really trying to grow their base and their ability to be a global player in the economy. And it's really setting up nicely for them, given, like I spoke about earlier, their stability from a macro environment, their geographic positioning, these economic reforms that I spoke to earlier, all really supporting and attracting sovereign wealth funds, private capital, foreign investors into these sectors that they're focused on. The PIF, Saudi Arabia's PIF and UAE's ADIA, they're really leading the charge here, diversifying their investment strategies. M&A activities you spoke to is really heating up. So there's really a lot to like from investor perspective if you're an LP, if you are an investor in companies on the GP side, and basically everyone that's in the investment community. There's a lot to appreciate here and what's happening. There's just a ton of growth in the area.
Absolutely. And I think too, the biggest point is like with that growth, there's a tremendous amount of information to keep track of, and we're focused on it. This is not just the only thing that we're commenting on or like highlighting through the podcast. We're also going to be putting out, various white papers and info sessions and briefings around the topic, because there's so much there. It's of critical importance. As you mentioned too, it's not just these grand visions. There's real sizable dollars being allocated by these different sovereign wealth funds, by these family offices that have actually put dollars to work to commit themselves to making these changes and making these investments happen. And the level of transparency there too has only gotten greater and greater over the years. I mean, for many folks that have been traveling in the region, maybe it was, okay, I want to come, listen, learn. But now it's not just one trip a year, it's multiple trips a year, meeting with investment professionals over there. And that is a big change too as well. So people getting more educated in the region, traveling to the region, raising capital, but also, making deals with different folks in the region. So having that level of transparency change, and it's not, becoming again part of the global economy and in importance from a capital markets perspective is just why we wanted to highlight it today. So just in closing, we have a couple Dakota events and product notes that we wanted to hit. We're hosting a Dakota Cocktails event in Chicago on June 24th, and then in New York City on June 25th of the summer. We also will be hosting next week our Dakota Research Conference on June 17th on Tuesday. Tremendous amount of support there, and look forward to that event. And then we will round things out for this episode. But thank you all for joining us, and please join us again for the next episode.
Hello, everyone. Thank you so much for listening to the Dakota Research Podcast. All of the information we cover today and much more lives in Dakota Research, our private fund due diligence database. If you're not familiar with Dakota Research, we really encourage you to go onto our website and book a demo so you can check out all of the recordings, all of the data, and all of the information we covered, plus much, much more. Again, thank you so much for listening in today. Go to our website and book a demo of Dakota Research today.